Then I would welcome everybody in the web room today for our earnings call. We will present our Q2 figures 2024 and the first half year. I welcome everybody and also want to shortly introduce my CFO, Mr. Günther Spitzer, who will later present the profit and loss statements and the financials. I would ask for the procedure today that we go 25 minutes through our presentation, and afterwards we have the Q&A session for about 35 minutes. So for everybody who is not so familiar, a short at-glance figures for Nabaltec. We see as we are a mid-sized company with last year's 200 million revenue and an EBIT of 18.3 million. We are a chemical industry. We see ourselves a specialized additive industry in the value chain. We have 516 employees, produce on 3 sites. Our headquarters and main production is in Schwandorf here in Bavaria, and we have 2 other sites in USA, Chattanooga, Tennessee, and Nabaltec in Texas, Corpus Christi. Export ratio is meanwhile beyond 75%. Last year it was straight 75, serving about 800 customers with 50 representatives all over the world. It's a fairly old production site here, 1937. We came from a big company, VW, and turned in 1994 to a private company. Later on, we went to the stock market. Annual capacity, approximately 265,000 tons over the globe. Here are the highlights for last year, for Q2 2024. We had a revenue in the second quarter of 54.3 million. That's a growth of 10.6 million. Major drivers were, of course, the increase in sales volumes, which was around 18%. So it was a volume-driven increase versus the sales price were kind of depressed with 6% law or negative over the whole product mix. Our operating result, our EBIT, turned out to be 5.8 million, and this was a significant increase on a year-on-year basis from last year, so 75.8% compared to a prior weak quarter last year. The margin turned out to be at 10.4% compared to last year at 6.7%. Improved production capacity utilization was majorly driven by functional fillers, the fine hydrates of 80%, and overall we are momentarily standing at 75%. The good margins were majorly influenced by lower energy costs compared to the same quarter of the previous year. And of course, the drivers was a driver of these earnings. The earnings share price was 0.46 euro, which is a significant increase to last year. Our net debt in the moment stands for 19 million, versus which net debt is minus 2.5 million, which was 5 million in the last year. The bank loans of 90.6 million are offset by a cash and cash equivalents of 93.1 million, which ends in this 2.5 million negative. Shortly again, what we do for the persons in the call who do not know so specifically, we have 2 product segments we also report on. We have a variety of product range. We call the functional fillers. We are majorly driven by the ground hydroxides, visco-optimized hydroxides, fine precipitated, and boehmites, all white powder, which we sell. We sell no finished goods in terms of end goods. And on the special alumina sides, it's oxide, reactive aluminas, and ceramic bodies. For the functional fillers, a major property which is very important through our whole value chain. They are eco-friendly, smoke-reducing, flame retardant. C is the major functionality, and non-abrasive, where the oxides are more focusing on wear resistance, electric insulations, and heat resistance temperature. The market segments, as you can see, are very versatile. We have a broad range. The major market is wire and cable, and our new driver here is the e-mobility, the battery market for the functional fillers, where on the other side, on the oxide side, we have the refractory as the biggest stake and the technical ceramics. Just to give you a short overview, product range, the fine hydrates with wire and cable counts for over 50% of our revenue of the first half year, which was 108 million euros. Yeah, if we have a glance at the functional filler segment in specifics, second quarter, we have here we see the revenue increase, which was quite a bit compared to last year, from 34.2 million up to 39.5 million. Highlight, of course, is a very good demand on the fine hydroxides, which are used majorly in the cable and wire market. Boehmite also had a good increase, which plays a future role of 20% in the second quarter compared to last year's figure. But here one has to pronounce or point out that there was a one-off item. We had a big contract coming in, and this was driving this revenue growth specifically. The income increase in sales was accompanied by falling prices, so we had to do some adjustments here, meaning sales volumes in this segment rose by a disproportionality of about high 24% compared to the previous year. If you look at the EBIT turned out with 5.2 million, which is almost 80% growth compared to last year. You can see a step up in our profitability also from last quarter. This results also in the very good performance and the strengths of our precipitated hydroxides related to the cable and wire market. This contributed majorly to our products in or to our profitability. For this, perhaps in this context, I want to also point out that also our US entities, majorly Corpus Christi, Nashtec, contributed to that result by a high production utilization, which was above 80%. Momentarily, the US market is very strong, driven by a high order book for even the next couple of months. And Nabaltec entity is improving on the volume side. We see that the market is receptive, and we arrived in the market, but still we are lacking in the profitability. We have to still catch up here to turn cash positive. Coming to our CapEx, CapEx in the functional filler segment has increased significantly which was also the major driver here in the CapEx increase compared to last year. You might be aware we have two major projects ahead of us, which is on the one side the investment in the visco-optimized business, which counts here for 6.1 million. And for the boehmite business, here we already have invested 4.8 million. In total, we have invested already 12.4 million in the first half, but the boehmite and the visco-optimized counts for 8.1 million. In total, we have planned to invest into these projects, visco-optimized and boehmite, for the next years, 50 million, in excess of 50 million. So the boehmite business will commission by the end of this year, beginning of next year, and the visco-optimized is the target for the commissioning is in the third quarter of next year. So you will see a CapEx increase also in the next quarters and next 9 to 12 months, significantly compared, of course, to the last year, where we did not have the pace on investments at that time. Yeah, then I would turn over. Oh, we have, sorry, I see overlooked the chart of Specialty Aluminas. Here you can see now the revenue of the technical aluminas. Of course, this business segment is a little bit smaller compared. It's not this growth driver momentarily. We have a revenue of 14.8 million. Second quarter is a little bit lacking in comparison to last year, and also the first quarter, it's kind of flat momentarily. This is majorly driven by the refractory industry, which is related to the steel. So the impetus lacks here, particularly also because our higher value added goods like the reactive aluminas do not perform as expected in the moment. You can also see from a profitability perspective, this product segment is not as good as the functional fillers. We turned out in the second quarter with 0.7 million, which of course is a significant increase by 75% to a weak last year. But one must say that last year was really an exceptional weak year. Some impacts on this profit was also due to lower maintenance costs. On the CapEx side, you see we have by far not this acceleration or this high investments on the Specialty Aluminas, which you see is much more moderate with 1 million. Here we have one major project in focus. This is maintenance, overhauling of all our kilns for the next 2 years, which amounts at approximately 10 million. So CapEx will increase. You will see a step up in the next 3 quarters. By the end of 2025, we will have then fulfilled this overhauling of equipment. This is an absolute necessity to guarantee the supply on our customer base in this value chain. Now I would hand over to Günther Spitzer, who is going through the profit and loss statement.
Yes, thank you. Let's continue with the profit and loss statement of the group for the first 6 months of 2024 compared to the same period of the previous year. Our revenues increased slightly by 2.2% to 108.4 million compared to the previous year. The increase in revenue is the result of volume growth of around 8%. As already mentioned, sales prices across all product areas are declining in the current year after the huge increase of more than 30% in the past 3 years. The rising export ratio of 76.4% reflects both the higher demand from abroad and the increasing share of total revenues generated by the functional fillers segment. Total performance increased by 4.7% to 109.9 million, supported by higher inventories of finished goods. Gross profit improved to 55.3 million, primarily due to the increase in sales volumes in the functional fillers segment. Gross profit margin as a percentage of total performance was 50.3% in the first half of 2024 and remained largely at the previous year's level despite lower sales prices. So we were able to compensate the falling sales prices by lower input costs for raw materials, auxiliary materials, and energy. EBITDA improved by 2 million year-on-year to 16.9 million, which corresponds to a good EBITDA margin of 15.4%. The EBIT margin of 9.9% in the first half of 2024 approached the strategic target of a double-digit margin and improved from 8.1% in the previous year. In terms of the segments, functional fillers recorded an EBIT margin of 12.4% and specialty alumina of 4.0%. Earnings per share rose from 0.63 in the first half of last year to 0.85 in the first half of the current year. Now I come to the cash flow statement of the Nabaltec Group. Cash flow from operating activity of 24.1 million increased by 9.7 million euros compared to the previous year. In addition to the improved operating income, this was mainly due to working capital effects, such as the significant reduction in inventories by 6.5 million and the increase in trade payables by 5.9 million. After deducting payments for investments of 14.2 million, free cash flow amounted to 9.9 million and therefore 6.5% higher than the free cash flow of the previous year, despite increased investment activity of 9.1 million. The cash flow from financing activity includes a dividend payment of 2.5 million euros. Cash amounted to 93.1 million at the end of June 24. A short look to the balance sheet. Total assets increased by 13.3 million to 294.2 million euros compared to the end of 2023. This was primarily due to an increase in property, plant and equipment of 8.4 million to 127.4, including assets under construction of 26.8 million euros, which reflect our ongoing investment program. Other non-current assets amounting to 15.9 million include a new fixed-term deposit of 50 million with a term of 2 years. At the end of last year, there was a fixed-term deposit in the same amount, but with a remaining term of 4 months and therefore reported under receivables and other assets. Inventories decreased significantly by 6.5 million to 44.6. This is the result of the targeted reduction in raw material stocks. Compared to 2023, cash increased from 86 million to 93.1. On the liability side, in addition to equity with a plus of 6 million euros, trade payables shown under current liabilities increased by 5.9 million to 16 million. The equity ratio of 50.2% reflects a solid balance sheet structure. Non-current liabilities of 123.1 million include pension provisions of 28.4 and bank liabilities of 90 million euros. The average interest rate for liabilities to banks is currently 3.1%. For the last slide, the outlook for 2024, I will hand back over to Johannes Heckmann.
Yeah, thank you, Günther. Here you can see once more the outlook, what we will see for the next 6 months so far. Actually, as of today, we see a characteristic still short-term order book. Customers are quite reluctant still, but we expect a demand, a stable demand for the majority of our products, which is a good news. And so we kind of have substantiated the forecast for the financial year 2024, and we see a slightly upward adjustment on the EBIT margin, which we reported. So our EBIT margin range will go up from 7 to 9, up to 8 and 10% by the coming year. Where the revenue grows, we are a little bit more cautious. We see here now a revenue growth in the range of 2 to 4% in total, compared to last year, where you can account then where we had an overall revenue of 200.1 million. So as you can see, that's still on the cautious side. We are well known for a more conservative approach. The year is now far in the second half, and if nothing really majorly happens, I would say we are on a fairly safe side. As I said, business in the US does perform very well, exceptional. We will see what influence the elections have. I don't see personally that might be a long term. There is not a big influence after the elections. A year until December would run very good. In Europe, we see also stabilization, overperforming momentarily. I repeat, here is the cable and wire market. The whole polymer market, flame retardant, has got a kind of a rebound here. Where we still lag behind is certainly the refractory side with the ceramics. Yeah, this is now a short update for everybody here on the Q2 figures plus first half year for Nabaltec, and I would now give the podium the opportunity to raise their hands for their questions. Okay, the first question from Mr. Wichert. Please ask your question.
Hi, thank you so much, gentlemen, for the presentation, and also congratulations to the, I think, good first half results. Maybe 2 questions from my side, if I may. Maybe one on your guidance. After we've seen about 10% EBIT margin in the first half, you seemingly imply a weaker second half. And so maybe you can give again some more color. You touched a bit on, but anyways, on the moving parts for that expectation. I think you touched on the Speciality Alumina element, but maybe you can also quantify the effect of the one-time contract in the boehmite. So what should we expect here then for the second half as a basically half year over half year comparison? And then my second question would be a bit more midterm. I think when we listen to the European automotive OEMs, we sometimes hear about a sort of a revision in strategy with regards to the drivetrain, maybe mentioning here Porsche, which seem to indicate that maybe in their next generation, they even increase again the share of combustion engines. So how's that affecting your expectations in the boehmite and viscosity optimized hydroxides? And maybe also what you hear from your customers, how they evaluate the current development here.
Yeah, to the first question, I would mention in two things. One, of course, the second half per se is always a weaker 6 months due to two effects. We have August and December, which are typically of lower volumes due to the holidays. This is a cyclically revolving effect we see every year. And of course, with lower volumes and lower sales, also the EBIT margin will be a bit weaker. Of course, what we cannot foresee, I would say the alumina side is keeping flat. We do not see a big impact on the functional fillers, especially on the fine hydrates for the cable. I would say this year runs pretty stable on a high stake. The boehmite, speaking of which, is definitely, we do not see a big rebound in the second half. We see perhaps even a slight decrease with this one-off effect being gone. Coming to your second question with the boehmite, there is a lot of insecurity. Yes, there is kind of a revival or a discussion with the combustion engines, but the company is still confident that in the longer term, the next 3, 4, 5 years, the electromobility will find its place. Momentarily, the politics don't give a straightforward guideline for the car industry, but you have to also see that a few plants here on the electromobility side are still being built, and depending also on the energy prices and what the policy will say, there will be an increase, and we are still living on certain base effects. I mean, there is not so much volume, and you spoke about visco-optimized, which are where the applications go majorly into the battery cases, into the pieces. Here, this is a fairly new product, so we will live on two effects. First of all, we are the first mover in this business, and second, there is still the market to be built up by the piece of battery, and there we have an advantage, and we will live from this volume driver. On the separator side, which is our biggest leg momentarily, we will have to wait and see, because we have a much higher competition environment. Separators are produced majorly in China, and there we have to see how this evolves and develops in the next 3-4 years. As I said, we are not so far away. If the momentum, the impetus picks up slowly, we would improve here. But the only thing momentarily, it's very unsecure waters. It's the market walks sideways or decreases a little bit on this value chain. But I would say the rebound we will see in the next 2 to 3 years, until it's settled and the politics give a clear view where we want to go. I also agree the combustion engine will not disappear overnight. I think it will just stretch out, but deeper in the technology, I would not go there. I hope I can give you a sufficient answer here.
Yeah, thanks for that. Maybe clarification again once on the one-off item in boehmite. Can we maybe assume that the increase in the second quarter over the first quarter, that this is mainly driven by this one-time item? So we should rather see maybe the third quarter again a bit more towards the first quarter or even slightly below that. Is that a fair assumption?
Yeah, this is an assumption where you are correct. But as I said, you saw this one-off. There's a lot of movement in this market momentarily, and we will see what happens in the next few months. But if you go on a cautious side, you reflected quite well.
Thank you so much.
Yeah, next question comes from Christian Sandia from NuWays. Christian, please.
Hi, good morning, everyone. I would have another question on the strong volume growth. I mean, you mentioned the cable industry. Can you give a bit more insights on what end markets within the cable industry were driving this strong pickup?
Yeah, good. Overall, I would say the strong drivers is certainly three points here. The cable and wire market, construction is playing a role. I think in the US, this is a major driver. And the second one is the rebound of the so-called server farms, which are built up. This was last year. We saw a very, very cautious move by all the big ones, if it's Alphabet, Amazon, and so on. I think these two are the drivers. And the third one is certainly also the renewable energies. You must know that in photovoltaic farms, in wind parks, there are a lot of cable and wires which are halogen-free, flame retardant. And if you look at the websites of Pirelli or who is Mr. Spitzer, who is publishing an Nexans, for example, you can see that trend. There is a good rebound and the order books are pretty full, and all our customers reflected momentarily, not only in the US, where I think the home growing or the construction market is coming back. It's also in Europe. But in Europe, the major drivers are certainly dollar cables, wind parks, and also the server farms. And you see by the announcement in the last couple of months that this has a bright future. Microsoft and Amazon announced big projects, billions of dollars to invest, especially, God thank, in Germany for new server farms. Which certainly will give a push in our market or in our value chain as well.
Okay, that's understood. And you, from what you just said, it sounds a bit like you are quite confident that this momentum from the cable industry will continue for the foreseeable future.
Yeah, absolutely. We will certainly lay a certain stress on this market. I think I see us also here on the top 2 or 3 in the world, not only from volume but also from innovations. There is a lot going on, and I'm very confident that this market with this variety of applications keeps Nabaltec on the top side. It's a very conservative market. It's a market with a lot of experience. And as you see, and there is a lot investments going on. Also projects coming up should not be underestimated. I just name sometimes the Brenner Basistunnel. If this goes, you would not imagine how many hundreds or thousands of kilometers of cables will be installed. Whoever will be the winner of this project, name, for example, Nexans, will certainly see in their order books a big pull, and such projects also have an instant impact on suppliers like we are. We are in a small market, but these things could drive certain customers by an extreme move and impact, and this is our business.
And then a follow-up question on this topic: do you have sufficient capacities at Nabaltec? I remember the utilization was already on quite good levels, and if these trends continue, would you get to a point where you would have to think about building out production capacities in the US?
So momentarily, you're correct. We are working some workarounds for increasing our capacity. Nabaltec has between 25,000-30,000 tons. Momentarily, we have a capacity load beyond 80%, 85%. If there is really like an extreme increase that the market doubles, especially on the US or North American side, we certainly would have the knowledge to mirror the plant. I repeat myself here, in terms of infrastructure, we certainly have the capability here. But this has to be very clear looked at how the market develops. We have spare capacity here in Schwandorf. We have also some projects going on, especially, and I don't want to go into depth to confuse people who are not so into the Nabaltec business, but with this visco optimized plant we will erect, we will have some debottlenecking on the fine hydrates as well as in our own plant. So there's a kind of a combination. We free some volumes, and this will help us to raise our Schwandorf fine hydrate capacities by, I would say today, 10,000 tons.
Okay, understood. And speaking of CapEx, what is your plan for CapEx spend for the second half of this year?
Yes, for the whole year, we plan with a CapEx of 30 million euros.
Okay.
For the second half, around about 16 million. Yes.
Okay, and then yes, your working capital has come down quite a lot. Would you say the current level is sustainable, or do you see further improvement potential in terms of inventory?
No, we don't see further improvement for the second half year. We are now on a level, and we hopefully can hold this level flat.
Okay, perfect. That was it from my side. Thanks.
Thank you. So the next question comes from Jörg Moser. Please ask your question. Oh, sorry. No. Work. No. Why can somebody in the back office?
Do you hear me?
Yes. Yeah, now we hear you.
I'm sorry. Yes, again, good morning. My name is Jörg Moser from NuWays AG, the Swiss Nabaltec distributor. The question is, will the new EU custom duties on China-made electric cars cause a shift in production from China to Europe? And if so, does Nabaltec expect higher sales as a result?
Of course, we hope. You must know there are already two customers here in Europe producing separator sheets, which is LG and SK. So if they shift the battery manufacturing, and of course it will be decisive if they also feedstock then locally produced in Europe produced materials like the separator, that of course will also help our customers to move on, and then as we are in the supply chain, we will see increasing volumes. The problem momentarily is not that our direct customers have no production. The problem is momentarily there are no or not many cell manufacturers. Most cells come out of China, as you are aware, and are not produced in Europe. If the European Union or Commission puts more trade registrations on. So a lot of things need to be produced here and not in China, or Levi's, like a lot of duties on certain imported goods. We will see. I think the best would be if regionally also Chinese or Koreans build up plants. Some are in the pipeline, as you might be aware. And as I said, in the next 2-3 years, we will see a higher momentum. And momentarily, there are a lot of hurdles also in terms of transportation costs. With the Suez Canal, we see that there are extreme high transportation costs. This will also give us an advantage in terms of being competitive on the European rim.
Thank you very much.
Then we have a question from Harry Kilby. Please, ask your question.
Hi, can you hear me?
Yes.
Yeah, we hear.
My question is a bit more on the macro environment. So obviously you mentioned the lowering of energy costs. How do you see this? Do you see this trend continuing over the rest of 2024 and into 25? And how significant will this be for Nabaltec?
On a micro phase or perspective, I would say for the gas price, we are fairly confident because we have locked in the gas price until the end of the year. So there will be no effect on the power, on the electrical power. We are floating momentarily in the market. I do not see any big impacts. Yes, the power price on a daily business goes up and down, but the average, I would say, has not a major impact for the next 5 months on the energy costs.
Perfect, thank you.
I see still 2 hands from Christian and Jörg Moser. Christian?
Sorry, I only forgot to lower it.
Oh, okay.
Okay.
Yeah, but if Jörg Moser, do you have another question?
No, thank you.
Okay, because the hand is still up.
Maybe if I may, I would have one follow-up regarding the Brenner Basistunnel. Do you have any idea when those contracts to your clients would likely be allocated?
No, I just mentioned that as an example. I have really no inside view. We know only from a technical perspective that in tunnels you have to have the highest flame retardant standards, and I have absolutely no idea momentarily who and will get this contract. This is something we have to wait. As I said, I just announced that as an example for a project which has an impact in our value chain per se, but no, not such information yet visible.
All right, thank you so much.
I do not see any more hands momentarily. Are there any more questions out there from the participants? If this is not the case, then we are a little bit ahead of time. Then I would say also in the name of my colleague Günther Spitzer, thank you very much for participating in our earnings calls for the Q2 figures. I just want to announce we will publish our next figures in November 21. And this in combination with another earnings call. We will be presenting ourselves in September at the Border Investment Conference, which is the next venue where we are giving some detailed information about the market movement. Thank you, everybody, for participating again. And I wish everybody a good day and a good weekend. Bye-bye.
Thank you and a good day.